Today I'm going to talk to you about why real estate investors use hard money loans and how they make money doing it. In this video, I'm going to discuss only 3 ways that real estate investors are using hard money loans to make more money. The first way is through transactional hard money loans. The second, loans on foreclosures or foreclosed properties. And the third, hard money loans that work similar to cash on rental property purchases. Let's talk about the first one, transactional hard money loans. A transactional real estate purchase is typically when you have a seller who's A, and you've got a buyer who's B, and then you've got another buyer over here who's C. So you've got A to B, B to C. Now, the transactional part is usually because that purchase is going to occur on the same day, and all parties are going to be part of that purchase. So for example, the seller is going to sell to you, and then you're going to turn around and sell to another party. And typically that's going to happen in a 24-hour period. And unless you have all cash to put up to purchase that property and then turn around and resell it, you can't do the deal. And that's why the rich get richer. Because typically a rich person has that money sitting around. So when a deal comes their way and they're able to get that deal at a really good price, they have another buyer over here that's willing to pay more than they're buying it for. That's a transactional real estate purchase. A hard money lender is poised and ready for their real estate investors who find such deals and can close on them in one day. Now, the second way that real estate investors are using hard money loans to make more money, to buy foreclosures. Foreclosure purchases are very sought after. Real estate investors are scrambling to get their hands on pre-foreclosures and foreclosures. Hard money loans allow real estate investors to purchase not just one foreclosure, but multiple foreclosures simultaneously. You can't do that unless you have a ton of cash just sitting around, and most of us just don't. The most savvy and sophisticated real estate investors have all of their hard money lenders on speed dial. And if they have 3 foreclosures, for example, that they get under contract all at the same time, guess what? They're able to purchase all 3 of those at the same time using hard money loans. Talk about being able to make money. And then finally, the third way that real estate investors are using hard money loans to make more money, income producing real estate, purchasing income producing real estate. Let's face it. If a property is out there and it's priced well and it's producing income in the form of, say, rents or whatever revenues that it's generating, that property is sought after, and there's probably going to be multiple offers. Hard money loans allow real estate investors to make an offer that's similar to all cash. Why? Because when a private money lender or hard money lender is going to lend on a piece of real estate, they're typically going to look at the asset and the merits of that asset rather than the financials or the income of the borrower. So if you've got a piece of income producing real estate that you've got under contract, if you've got a hard money loan, you can make an offer that's similar to all cash. And again, why? Because there's no financing and appraisal deadline like you're going to deal with a bank loan. So how are real estate investors making more money using hard money loans? In this way that I just described, submitting offers that are similar to all cash on income producing real estate and taking those deals down. These are just 3 ways that real estate investors are using hard money loans to make more money. If you've got some other ways that you've used hard money or you've seen others do it, leave them in the comments section below and share them with others. If you liked this video, please like it. And if you found it useful, please share it with someone you know.